The Indian stock market witnessed its worst crash in 4 years with a decline of over 6% on June 4th. This was after BJP fell short of securing a clear majority in the 2024 Lok Sabha elections. Now, sectors such as defense, public sector undertakings took a massive hit. However, one sector that has stood out during this time is Nifty FMCG. It was the only sector in the green on the day of the election results and has continued to lead the rally. And over the last 5 days, the Nifty FMCG index has surged 5%. To give a little context, the FMCG sector has been one of the underperforming sectors in the current calendar year. This was mostly because in recent quarters, rising inflation and uneven monsoon has affected consumption, especially in rural areas. And this has impacted the margins of major FMCG companies. So what has changed now and why are FMCG stocks doing well? The number one reason is that investors are preferring defensive stocks like FMCG in this highly volatile environment. Now, FMCG stocks are seen as safer because they produce essential goods that people need no matter what's happening in the economy. Another factor is the positive economic outlook. With inflation falling and forecasts of a better than normal monsoon, we can expect increased farm income and a boost in rural economic growth. Now, this optimism is also helping FMCG stocks perform well. Now, politically and economically, the landscape has also slightly shifted. Over the last decade, the BJP government has focused heavily on capital expenditure in infrastructure to drive economic growth. Now, the market was expecting that these pro-infrastructure measures would eventually increase consumption. However, there's been a lag, especially in rural areas. Also, even though India is doing better than other countries in terms of GDP growth, private consumption growth has been moderate. Now, with the unexpected political shift following the elections and BJP's massive fall in rural seats, there's a general consensus that the new government could bring new policies to support private consumption and rural development. So all of these factors together explain why FMCG stocks are doing well despite the broader market volatility. While we say this, we do ask you to not focus on short-term plays, but instead concentrate on long-term factors. Now, short-term market factors can be unpredictable and driven by transient events, leading to losses if decisions are based solely on these temporary changes. Now, in contrast, long-term investments are generally more stable and grounded in fundamental factors, and that's what you as an investor need to focus on. Having said that, is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.